Hello and welcome back to the channel, everybody. Today I'm going to continue my small remarks on value-added tax, and we are talking about cross-border services still. So some selected sort of services have special rules for the place where the service is attributed to by the legal rules, and so we are going to have a look on a special rule now, because here we have a special rule concerning the services in the field of telecommunications, so broadcasting, radio, television, and especially of importance more and more is services which are rendered in an electronic way. The special rule which we are going to look on is just applicable if it's rendered to a private person. So, private person is my personal abbreviation or my personal, let's say, short term for everybody who is not an entrepreneur, who acts as such, or who is a person who has no VAT identification number, or to be more exact, person which has neither nor is an entrepreneur, nor has a VAT number. That's a private person, and electronically rendered services to these persons are the subject of our small video today. In that case, the place of service is deemed by the rules to be where that private person has his, her, or its residence. So that can be found in paragraph 3a5 of the German Umsatzsteuergesetz, USDG. We might have a small glance on that rule before we go on. Well, here is the rule. So if the recipient of a service, which will be described more in detail in sentence 2, is neither an entrepreneur for whose enterprise the service is acquired, nor a juridical person who is exclusively not active as an entrepreneur and has got a VAT identification number, nor a juridical person who is partly acting as entrepreneur and partly active as non-entrepreneur in cases where the transaction is not entirely for the private consumer of the personnel or of one of the partners or shareholders. So to sum that up, in cases where the customer is not an entrepreneur and doesn't have the status of an entrepreneur because he, she, or it has a VAT identification number, then the place of supply of this service is at the place where the customer has his residence, habitual abode, or his statutory seat. And now sentence 2 tells us which services are met. Services in the sense of sentence 1 are the field of telecommunication, broadcasting or television, and services which are rendered in an electronic way. Number 3 is potentially the most important one for you and me. Sentence number 1 is not to be applied if the entrepreneur has seat, place of management, or if a seat, a place of management, or permanent establishment does not exist, his residence or habitual abode in only one member state, and the total of considerations, so payments or so, for the services listed in sentence 2 to recipient listed in sentence 1, with residence, habitual abode, or seat in other member states than the own member state of the supplier, plus the amount of the inter-community distance sales as defined in paragraph 3c1 did not exceed 10,000 euro in the previous calendar year and does not exceed this amount in the current calendar year. Oh, highly complicated sentence. You see that already. The entrepreneur who renders the service can renounce on the application of this sentence by declaration to the fiscal office. Such a declaration is then binding for at least 2 calendar years. Now you see, reading that makes us a bit unhappy, so we are going to discuss that a bit more with common sense in detail immediately just now. Now let us first begin with the question, why does such a rule like 3a5 make sense at all? So Well, if you want to understand a rule, then the best solution is always imagine what would happen if the situation would be different. So if the rule would not exist. And so the question is, well, then the general rule of 3A1 would apply. If you render a service to a private customer, then the service would be attributed to the place or the country where the supplier has established his, her, or its business. So let's imagine. Imagine now we had a customer, Germany, and the customer has a computer, and now the customer looks for electronic services. Imagine first we have a supplier in Germany. This supplier would render a service via internet electronically, and the service would be charged where the supplier has established his business, 3A1, so with 19%. Now there is another supplier competitor established in Switzerland, and under the German rules in the 3A1, this supplier would then have to tax the supply not in Germany but in Switzerland, and Switzerland would charge 8.1%. So a 10% advantage over the German competitor. That's hard. However, there would still be a better competitor because imagine there is a supplier established on Heligoland. You remember Heligoland is a German island which under the VAT rules is not regarded as a part of Germany. So they would simply be regarded as on the moon somewhere. And so if the general rule were applicable, then the place of supply in Heligoland would mean that there is no VAT of Germany at all. And so it's clear who would win in competition. It would always be the supplier in Heligoland. And so if these were the rules, all German suppliers in mainland Germany would die out. You would have a transfer Swiss suppliers, Indian, US suppliers, or you would see a huge migration from suppliers of electronic services from Germany to Heligoland. It would probably be the most popular location all over Germany. Makes no sense. So that would be a strong distortion of the market and of competition, and this can't be. So that's the reason why we make a special rule wherever these suppliers are, that taxation will happen in the country where the customer has his or her residence, and then the problem vanishes. Now, why is that rule only written down for services rendered to private customers and not to entrepreneurial customers? Well, also then, if you want to understand it, just imagine what would happen under the usual rules. Imagine we have again the German customer, now a business customer. We have a German supplier, here he is, renders a service. The service would be charged with German VAT because the place of service is under the basic rule of 3A2, where the customer has established the business, so in Germany. Swiss supplier renders a service to the German customer. Customer is a business customer. So the applicable general rule is 3A2. The tax goes to the country where the customer has established his business. So Germany again, and the same applies to our supplier from Heligoland. It's 3A2. The place is not in Heligoland, but where the customer has established his business. So in that case, there is no distortion. So here it doesn't matter. We have already the correct result, a neutral situation wherever our customer in Germany, if he or she is a business customer, wherever he or she obtains a service from, it will always be taxed at the same place in Germany. So that explains why we don't have a special rule in this situation, because here we don't need a special rule. The general rule always and already leads to the correct result. So that's why we only have a special rule for services rendered to private persons. Yeah? Or oh, so now what is a service which is rendered in an electronic way? That has been defined as a service which is rendered nearly without any important human activity, so automatically. So the service is not just ordered online, but rendered automatically. So ordering something in an online shop is not qualifying for this rule, especially since ordering a good in an online shop would not be a service at all. It would be a delivery when the good comes, because transfer of economic ownership in a good is a delivery and not a service. So this would be a complete wrong movie if you think of that. A service which might be rendered online, we would be closer to that when we think of an online webinar where you visit a course on something. It's a live event, so you have a teacher in front of you and that teacher teaches you live something. In that case, it would also not be an electronic service because it's not rendered electronically. Here you have a major human activity. So that would already be out. However, if you have a database and you have videos stored there, so a movie, and you load it down automatically, electronically rendered service. The same when you listen to music, which is downloaded from a database. A live concert, which you can see online, would not be the same because when it's live, you still have major human activity. So when you watch this video, the permission to, the possibility that you can watch it online is definitively a service which will be rendered by YouTube to you. By the way, for free, but let's not concentrate on this. And then everything happens automatically because now when you see me, that's all stored somewhere in a file. And so when you watch me, it's all done automatically. So watching this video or getting access to this video would be an electronically rendered service. Okay. Now, what does this rule mean in practice? The supplier has to treat every service to a private customer according to the VAT rules of the EU country in which this customer lives. That means, huge surprise for the supplier. The supplier needs to be informed about all the applicable VAT rates for radio, so broadcasting, telecommunication, and electronic services in all member states of the EU. That's probably big fun. And then, if you consequently follow that idea, you would have to hand in now 27 tax declarations in all different member states of the EU. This last point has been seen by the legislator as too difficult, too much of a bureaucratic burden for a simple person. So for this, they looked for simplification, for help. So the declaration of the transactions covered by 3A5, well, we have here the same basic situation as with distance selling transactions from one EU state to a private customer in another EU state. So for both, they developed recently that so-called OSS scheme, the one-stop shop scheme. And that means you are allowed to hand in your tax declarations for all the other EU states at your home state fiscal office, or at a specialized fiscal office designated by your home state. That depends on the internal organization of your state. So you can hand in your tax declaration for all the transactions with all other member states covered by these two rules on a tax declaration sheet of your, or better, online device designed by your own member state in your own language, and then your member state works on the tax declaration, collects the money, and passes on the money to the other states. So a German enterprise would then have to declare in their OS declaration all the net amounts of relevant deliveries and services made to private customers, let's say in France, with their net amount plus separately the amount of French tax. All the net amount of deliveries and services made to private customers in Belgium with net amount plus Belgian tax, etc., etc., Bulgaria, Romania, and so on. So you would have to make yourself familiar with all the VAT rates of all other member states, as already mentioned. And as that is very, very burdensome, complicated, drives you mad probably, then one said, okay, can't we simplify that? So the idea was then where the turnover covered by these rules or relevant for these rules is only absolutely unimportant. There we grant you an exception. The OSS scheme does not apply. So 3A5, the special rule which we deal here with, does not apply where your turnover, your transactions covered by 3A5 plus 3C, the distance selling rules, are so unimportant that they don't exceed 10,000 euro for all other member states together. No? So if your DVDs, books sent by your online shop plus your electronic services rendered by internet to private customers in other states, if all of them do not exceed 10,000 euro, then 3A5 is not applicable. You end up with the general rules. However, that is only offered for entrepreneurs which have their only residence and their only permanent establishment in a single EU member state. When you are already a multinational enterprise with establishments in several states, then you can already comply with the rules, evidently. You can renounce on rules. However, if the threshold is not yet surpassed and the entrepreneur did not renounce, then you fall back on the general rules, so 3A1 would apply, and you would have to pay tax on your services in your country of origin. The underlying idea is if it's less than 10,000 euro for the whole European market, then you are so unimportant that you pose no risk of a distortion for the market, so that one can renounce on the exact taxation. Now, why should a very small entrepreneur below the threshold opt for the regular taxation? Because if you read it correctly or cautiously, then the rule said, well, if you are below 10,000 euro last year and this year, then you can apply the general rules and pay your tax at home. That's easy and simple. However, they said you can renounce on that option, so you can opt into the OS scheme. Why the hell should somebody do this? And the answer is many people will do. Because if you can foresee the problem that you will surpass the threshold in the near future, then imagine you do an online shop or an online business or an online database. So that means everything you do is programmed. And now imagine you make use of the simplification rule, and then you can foresee you will have to change the whole thing in half a year or next year. So it's probably less work to directly set up all your website and all your programs in a way that the OS scheme can be followed and is followed, instead of first renouncing on the thing, say, I have 3A1, I pay my tax only at home, and then when you come near to the threshold, you have to press the alarm clock, call for an IT service that they rewrite all your programs and now change over everything to make you able to follow the rules of the regular taxation, so 3A5 and 3C1. So highly complicated. So when you know about the problem, you will probably directly from the start onwards opt into 3A5 and 3C1, so into the OS scheme, because every other thing is probably too complicated. Yeah, so note that this threshold is relevant for both together. So you have to add up the turnover of distance sale of goods and electronic services. Only the total counts. So you have to add them up. So a single electronic service of €20 might bring you to the OS scheme if your online shop has already sold €9,999 to private customers in other EU states. Okay. In the long term, 3A5 and 3C4 are highly interesting rules. So this threshold thing, because it means that now every owner of an enterprise has to know the rates for all his products and services in all other member states of the EU. By the way, under that aspect is probably a relief that electronic services have no reduced rate. It's always a regular rate as far as I know. And you don't only have to know them, but once you know them, you have always to follow up the legislation in all the 27 member states. If a rate has been changed, you have to make sure that you are informed in advance on time that a change takes place. The fiscal administration of your home state must do the same thing, at least the guys and girls working on the OS scheme declarations. That makes professional trainings in VAT for the future much more complicated, because you have always to give people a chance to inform themselves about all what's going on in other member states. Now, what I regard as a long-term consequence is now the members of the fiscal administration of each member state will also be hit by the complicated situation. So they also will begin to suffer under the existence of so many different VAT rates. So they also might develop a kind of an interest in harmonized or more harmonization of the rates in the EU, because otherwise it's a bit complicated. So basically that means you can't run an online shop or an online database or something like that without professionally managed tools in which the goods and services are classified without any possibility of an error in VAT rates. That probably needs specialized programs, which you will have to buy from others probably. And I can imagine that probably gives an advantage to other big suppliers, so the big firms. Yeah, that was my small overview on 3A5. So mostly electronically rendered services to private customers. And I will be happy to see you again soon for some other remarks on value-added tax. Thanks for watching. Till the next time.